All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up. Don't forget, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So, a little bit of a roller coaster week here. We had the FOMC on Wednesday, obviously. And obviously, I'm sure everybody's heard by now, but we had Fed kind of forecasting 2 rate cuts, which is not what the market was really looking for. And that's kind of the excuse for this big sell. We had one of the worst days in quite some time, I believe since March 2023 with the banking crisis. It was a 3% down day, pretty much across the board on the indices. I think a lot of this also had to do, I mean, that was the official reasoning. You'd kind of do some digging, though. A lot of this having to do with, partially where the options market is expiring with this big December expiry, but also the government shutdown, right? So, poly market odds, I think, jumped to like 50% the other day of a shutdown. And these types of, they always tend to do this, right? These government shutdowns, they try to slam it ahead of time, and then you can see today here on Friday morning, we gapped down and reversed pretty nicely, and we are just a little bit off the highs right now, but overall a pretty nice recovery here for the market. And really the story, for this week was kind of like looking at the declining, advanced decline, no pun intended, or the breadth here, and that was, and that's been something that people have been crying foul about for quite a while, and it hasn't really hurt the market outside of a little, a couple of air pockets here. But we got to, I believe we actually got to 14 days of consecutive, more, decliners and advancers, despite the market being, in a general uptrend. And then today, obviously, we hit a little bit of a max kind of stretch here. So if you look at, the McClellan oscillator, very nice bread thrust here this morning. You can see the Russell 2000 in the corner of my screen here, leading the market off the lows. And you can just see it visualized there. Anytime we start getting past, negative 200, it's usually a pretty good indicator the market's ready for a rebound. And it's amazing how quickly we got there too. But either way, strong bread thrust today. And we'll see if we do get this, a lot of people are looking for like a Santa rally type thing here. You had a flag pattern starting to form, and sometimes you just need to get people off the train to get that Santa rally. But no volatility, then boom, look at these moves here. Big outside moves, and who would have thought this was going to happen right before Christmas? But here we are. I'm working overtime here right during the holidays. But either way, good volatility. It looks like the spiders are going to be able to hold that 50 moving average here by the end of the day. We are seeing VIX right now. As long as that stays below 20, I think bulls will be okay next week. The market is coming in a little bit off the highs, but I mean, we just had a 200-point move on the E-mini in a few hours, so that is totally normal. But anyway, very, very nice volatility. There is, I think, potential pockets of risk here going into early next year. Right now, kind of going into the end of the year, I think things will calm down a little bit. And normal trading is going to be kind of a thing of the past here for the last 2 weeks, because we've got Christmas next week and then New Year's right after. So you're gonna have a shortened trading set. You're gonna have shortened trading sessions, half days, things of that nature. Institutions may be taking off here, but I would think the market can hold up until then. January should be very interesting though, and I expect volatility to increase in January. But right now, market's hanging in there okay. 6,000 is resistance right now, and then above that is we're gonna say like right around 60.25 for now. Basically, if we can break back above that failed flag there, we should squeeze up, and you could see even one more thrust to new highs even, believe it or not. But that's just the here and now here, and yeah, good move for the markets. Nice volatility. You see the Qs here again, gapping below the trend line and closing green today. Russell 2000 took a really big hit, but again, off the lows here, and again, you're essentially just retesting this breakup bar, which was the election move. If we look at the Russell here, the RTY, and you take a fib from this low, you see we went right to a 618. We hit the 200 MA. If we look at a weekly chart, you can see this. We just tested the breakup bar low essentially. So things were ugly on Wednesday, but getting a sharp bounce here. The Dow via the YM. Again, 50% retrace, testing the low, and a nice pop. So nice volatility, makes for good trading here. I'll admit, I did not see that big outside move coming on Wednesday. Definitely stung a little bit, but did pretty well into the end of the week here, catching this morning's low. So SMH, that's up 2%, just like a lot of things here. So gapping down and then closing green. And what's interesting is I'll note NVIDIA has been pretty strong this week. So, a lot of people looking at this head and shoulders. It's a big stock now. You're not going to gain a lot of alpha on these patterns. And it's holding. And it did not participate in the sell-off Wednesday. It was red, but you didn't even take out Tuesday's low. So NVIDIA here, if there's going to be a little bit of a rally, I think this could take some leadership into the end of the year. But SMH hanging in there, still inside of that channel. And if it breaks above, it can have, the little Santa rally that everybody's looking for. IGV up 2%. Again, gapping into the 50 moving average. And a good bit off that. The transports have gotten very weak, though. And we'll talk about the yield curves in a second. But, maybe that's starting to indicate here some weakness maybe on the horizon. Big sell. We were looking for a bounce here. It didn't come. And all the way down to the 200 moving average. So didn't quite get down to the lower trend line, but definitely not a make a case it's a failed breakout now in the transports. Short term though, should find some legs here, but definitely pretty good sell there. All right, let's get over to rates here. You see the volatility index coming in pretty sharply after the big spike. No follow through really. Right. But interest rates here, so let's just look at the spreads first. Yeah, 2s and 10s are at the highest point that they've been in years, literally. 3-month 10-year, nicely fully uninverted. This is happening with rates holding up, right? So the rates are down today. PCE came in a little bit better than expected, so a little bit cooler. But, still, look at this move in rates here on the long end. So what we're seeing here is rates essentially on the long end saying inflation expectations are embedded. And we're seeing yield curves normalize. Things like the transports are selling off. Could be, forecasting stagflation, maybe a stagflationary recession. That's a risk into early next year. Again, short term here, I'm still thinking we got a good, the market's found its footing here for now. And we'll see how we do into the end of the year, but it's something to keep on watch moving forward. XHB actually triggered the head and shoulders. So you can see that, and it's almost played out to target. Who knows, it might bounce here, retest 110, and then go down there. But right now, it is getting a bid. You can see this this purple trend line here goes all the way back. 1, 2, and it pierced. And it's working right now. VNQ had a really good sell. So again, we talked about this. We were looking for this to bounce. Here, it didn't. So we said that's a red flag, not good. And look at that. Big dump out. And, XHB and VNQ are finally respecting rates right now. For the longest time, XHB just said, well, we don't care what rates are doing. Who cares if the 10-year is higher? And now I think you're starting to see that reality set in. Good bounce today, but really good sell. So again, you had a nice bull flag breakout here, and it couldn't hold. Trying to hold this, 89, 88 area on the weekly, which is fine for now, but you're going to want to see some follow through here to negate this. XLF again, backing off the 49. I didn't think we'd go through 49, but it did, and now it's trying to get back above. We can close above, 49.30. It should be able to rally. But good retrace there. Regional banks again, right into that 100 moving average. We were looking at this kind of gap area, the highs, and that's where it's getting the bounce. You can see the KBE doing the same. Broker dealers again, good sell Wednesday, and trying to reclaim that 50 right now. Everything coming in this week, and everything getting a bounce. Oil up 22 cents. Volatility is very depressed here, but it is coming. I don't know which way or the other, but it's coming. You can't stay in this range for that much longer. Look at outside of this and this right here, these two outliers, we've been in this range since September, from 72 to 67. Not going to last. So volatility is coming. XLE also just getting hemorrhage, and I continue to like energy here. By the way, it's a technical thing, not really in terms of investing. I mean, I do like, Exxon for both anyway, but this was as of yesterday. So the last time the Exxon was this oversold was a COVID low. I mean, I don't know how much more of it, everybody wants a dip to buy, and then when they get a dip, nobody wants it. So I like energy here. I'm just going to keep saying that. So I'll keep accumulating. XOP in the double bottom, OIH in the double bottom. We'll see if that can get continuing up next week. Uranium here via CCJ. Again, backing off like a lot of things. Bulls, excuse me, bulls want to see a higher low. If this retraces further, I think 49 to 50 is a good support right now. URNM going into the 40 handle, which we talked about last week. That should get some support there, as should NJ. Nat gas. So this has been, I've been wrong about this. I mean, I haven't touched it, but I didn't think we would. This is very rare to see nat gas bidding up like this in December. It's usually a third week of November top right here, 11/22, and then it's lower highs until March. And we're bucking the trend here. So, and nat gas F contract outside move here. Now it is into backwardation. So I don't think it's going to go to $4 on the continuous, but right now it's acting well. So you got above 370. It can try to go to $4 before the contract roll, but after that it will gap down. But yeah, nice move for nat gas. And let me see the F. Yeah, if we break back inside of the wedge, then it's one thing. But right now you're acting well. So. Rise there. All right, dollar index, again, big week here. It is pulling back today, though. So again, next big level is 109.50. And I would have been a little surprised if it broke out this week. So I've been looking for this to do some consolidation and some chop before another run, and I think it just got a little ahead of itself here. But the dollar's been strong with yields, right? So that checks out essentially. Gold also up 1.5 today. So it sold off Wednesday with rates, exploding. But take a look at this though. Look at gold, right? And then look at the 10-year, and then look at the dollar, right? You'd think that gold would be getting pounded, right? And it's just, you still have a higher low potential set up here on the daily. So gold's showing a lot of relative strength. And you guys know I do like it going into Q1. So we'll see if this pattern tightens up a little bit more. It could get interesting. Silver as well, nice spike of the trend line and no follow through yet. If we can reclaim the 200 and reclaim that 31 handle, silver could squeeze up. So the metals are getting interesting. I don't have anything great for platinum and palladium yet, but I'm still watching them. Copper is the one I don't really like. I don't like the lower highs with the equal lows. So I'd be careful for that to go to 390. But I'm not really biased on it one way or the other. Then coins here, Bitcoin, again, made a new all-time high early in the week and then pulled back to the 50 MA. Perfect kiss. Been following this kind of like short-term trend line here, and we're back above it. So Bitcoin's still holding up. It's resilient right now. ETH now green on the day too. Deep retrace there. And it's trying to hold this trend line on the weekly. So I don't see anything terrible for crypto here. Might need a little bit more consolidation, but no real damage right now. So I think next big level for Bitcoin is like 115 if it wants to try and get up there. You want to see it, preferably hold this shelf though. So overall, great volatility here. We'll see what happens next week. Again, shortened trading week, so I'm not expecting a ton of action. Volatility may die down a little bit, but nice, sell and then good rebound here. Again, big resistance for the, SPX is 6K, and then, I'm going to say like 60.25 after that. Obviously, bear resumption can take place after the lows are taken out. I would think there's a lot of support still down at about 57, 57.50 though, at least on the daily chart for now. So, anyways, guys, I'll wrap it up here. Again, you guys take care. Come find Jason on Patreon. Come find me on CoverTrades.com. I'll see you guys all next week.